The stadium lights are still warm long after the final whistle. The crowd has gone home, the chants have faded into the night, but somewhere behind closed doors, another game is still being played, a quieter one. No grass, no goals, no glory on the scoreboard, just numbers on screens, signatures on contracts, and decisions that will shape football's future far more than the 90 minutes fans just witnessed. Because today, football is no longer just a sport, it is a global financial machine, and the question echoing through boardrooms, fan forums, and investment banks alike is simple yet unsettling. Where is football money going next? To understand the future of football money, you have to understand where it began. Long before billion-dollar broadcasting deals and state-backed ownerships, football was local. Clubs were born in factories, churches, and neighborhoods. Money existed, yes, but it was small, practical, almost humble. Gate receipts paid the bills. Players often had second jobs. Loyalty mattered more than leverage. But as television arrived and football learned how powerful its emotional grip truly was, everything changed. The game discovered that passion could be monetized, scaled, and sold across borders. And once that door opened, it never closed again. The first major turning point came when football stepped onto television screens around the world. Suddenly, a match was no longer limited to the people who could physically attend it. Millions could watch, then tens of millions, then hundreds of millions. Broadcasters realized that football wasn't just content, it was appointment viewing. Leagues realized they were sitting on a gold mine. The Premier League's formation in the early 1990s wasn't just a sporting revolution, it was a financial one. Clubs broke away, centralized media rights, and sold them for unprecedented sums. Money flooded in, wages exploded, and the gap between rich and poor clubs widened overnight. But that was only the beginning. As satellite television expanded and later streaming platforms entered the race, football became one of the most reliable engines in the entertainment economy. Broadcasting money turned clubs into brands and leagues into global products. A fan in Asia could support a club in Europe without ever visiting the stadium. Shirts were sold across continents. Preseason tours became commercial showcases. Football stopped belonging to a city and started belonging to the world, and with that global reach came global investors. The next era of football money arrived wearing suits instead of scarves. Wealthy individuals, corporations, and eventually entire states saw football as more than a game. It was soft power. It was influence. It was visibility. Buying a football club meant buying emotion, loyalty, and cultural relevance that no advertising campaign could ever fully replicate. Owners injected massive capital into clubs, transforming them overnight. Training facilities became world-class. Transfer fees shattered records. Success, once built slowly over decades, could now be purchased in seasons. But money has consequences. As clubs grew richer, so did their risks. Wages rose faster than revenues for many teams. Financial fair play was introduced as an attempt to control spending, but enforcement proved complex and controversial. Meanwhile, fans began to feel something slipping away. Ticket prices climbed. Kickoff times shifted to suit broadcasters, not locals. Traditional rivalries were rescheduled for global audiences. The soul of the game, many argued, was being traded for profit. Then came a moment that exposed the tension between football as a community and football as a commodity more clearly than ever before. The attempted creation of a closed European Super League sent shockwaves through the sport. In theory, it promised financial stability and guaranteed revenue for elite clubs. In reality, it revealed a frightening possibility, a future where sporting merit mattered less than market size, where tradition bowed to guaranteed profits. Fan backlash was swift and fierce. Streets filled with protests. Social media erupted. Governments intervened. The project collapsed, but the idea behind it never truly died. Because the financial pressures that led to it still exist, clubs at the top face relentless demands to grow revenues year after year. Investors expect returns, owners want stability, and in a system where success brings more money and more money brings success, those outside the elite circle are left chasing shadows. This is where the future of football money becomes truly uncertain. One of the most powerful forces shaping that future is private investment. Hedge funds, private equity firms, and venture capitalists are increasingly increasingly involved in football. Some buy minority stakes, others acquire entire clubs. They bring financial discipline, data-driven decision-making, and long-term growth strategies. But they also bring a mindset that football has historically resisted. Football fans don't think in exit strategies or return on investment timelines. They think in generations. Investors think in cycles. This clash of perspectives raises a critical question. Can football remain emotionally authentic while being financially optimized? Investors see untapped potential in stadium real estate, digital fan engagement, global academies, and media rights in emerging markets. Fans worry about being reduced to metrics and monetization funnels. Clubs stand in the middle, trying to balance books without losing identity. The future will depend on how these interests align or fail to. Another major shift is happening quietly but powerfully: the digital transformation of football money. Social media, direct-to-consumer streaming, and data analytics are changing how revenue is generated. Clubs are no longer dependent solely on broadcasters to reach fans. They can sell subscriptions, exclusive content, and digital experiences directly. This creates new income streams, but also new inequalities. Big clubs with massive global followings benefit disproportionately, while smaller clubs struggle to compete in a digital attention economy. Then there is the rise of new financial instruments within football itself. Player trading has become a form of asset management. Young talents are signed not just for sporting potential, but for resale value. Multi-club ownership models allow investors to move players across clubs, optimizing development and profit. Critics argue this turns players into commodities and undermines competition. Supporters counter that it brings efficiency and opportunity. The truth likely lies somewhere in between, but the direction is clear. Football money is becoming more sophisticated, more structured, and more detached from the romantic unpredictability fans fell in love with. For fans, the future of football money will feel personal. It will show up in ticket prices, subscription costs, and the accessibility of the sport. Will football remain something you can watch freely, or will it retreat behind paywalls? Will local fans still feel prioritized, or will global audiences dictate decisions? Clubs that ignore fan sentiment risk backlash, boycotts, and reputational damage. In the age of social media, fans have more voice than ever, but whether that voice can compete with billion-dollar interests remains uncertain. For clubs, the future is a balancing act on a financial tightrope. Sustainability is no longer optional. Clubs that overspend chasing short-term success risk collapse. History is filled with fallen giants who ignored financial reality. At the same time, caution can mean stagnation. Falling behind on investment can relegate clubs not just in leagues, but in relevance. The clubs that survive and thrive will be those that innovate without forgetting who they are, that grow without losing their roots. For investors, football represents both opportunity and risk. The opportunity lies in football's unmatched emotional engagement. Few industries command such loyalty. Fans don't switch teams like brands. That loyalty creates stable, long-term value. The risk lies in regulation, unpredictability, and public scrutiny. Football is not a normal business. Decisions are judged morally as well as financially. An investor can't simply cut costs without consequences. Every move is watched, analyzed, and felt by millions. Looking ahead, the future of football money will likely be shaped by compromise rather than conquest. Total commercialization risks killing the magic that makes football valuable in the first place. Total resistance to financial evolution risks irrelevance. Somewhere between those extremes lies a fragile equilibrium. New revenue models will emerge, but fan trust will become a currency as valuable as broadcasting deals. Transparency will matter, governance will matter, and perhaps most importantly, memory will matter. Football will have to remember why people fell in love with it long before the money arrived. As the next decades unfold, football will continue to evolve. Stadiums may become smart arenas, matches may be consumed in virtual spaces, ownership structures may change again, money will keep flowing because passion will keep flowing. But the real question is not how much money football will make, it is who that money will serve. When the lights finally turn off in the stadium and the accountants close their laptops, football will still live in the moments fans remember forever. A last-minute goal, a local hero, a club saved against all odds. If the future of football money forgets those moments, it risks becoming hollow. But if it learns to protect them while embracing change, football may yet prove that even in a world ruled by finance, some things are still priceless.